All right, team, we are live. Happy hump day. It is 2 p.m. on a Wednesday. Lots of stuff going on right now. A lot of stuff going on. We're going to talk about mortgage rates today. I'm going to hit the home builders. I don't mean the home builders in general, okay? But I do want to talk about new home builds. Some of the shady things that I've seen new home builders do in this cycle multiple times, okay? Not one-offs. We'll talk about some of the top stories as well. And, I've been doing these updates now and making these videos from my home office for, pretty much since Corona, really. And it's time to get back in the studio. So the studio is open in Sorrento Valley. We're finishing up the podcast room, which is where I'll be doing a lot of different content. But we're going to be making lots of segments of real estate debate. We're going to be doing individual interviews. All this stuff is going to be coming from the studio soon. So while it's been real, making the content from home and just making do with what we had to do to get the information out there, I'm always going to do my best to keep you informed of what's going on. So I'm trying to share this video right now. It's been fun, but it won't be a whole lot more of this. It's going to be a much different look. And so we'll enjoy the informalities while we have them. Okay, so let's talk about what is happening. Let me show this to you, actually, before we look at rates, before we do anything else. Let me just explain a simple concept to you. And I want you to think about this. I know a lot of realtors know this. This is more for people who are home buyers who are, saying, hey, I don't want to be in the tussle anymore. I'm going to go buy new construction. Okay, nothing wrong with new construction. Nothing wrong with it, but know what you're getting into. In my experience, and I have several clients right now in escrow with new construction, and this year we've closed a handful of people who bought and financed with us new construction. And, a lot of times the builders will push people towards their in-house lender. And the reason they do that is for their own internal efficiencies. They want to have control over everything. They basically want you to be completely unrepresented and to have complete control over you. They see you, if you're buying new construction, they see you as a number on a spreadsheet. You are their buyer. That's the way they see it. That's the way they want to control it, which is why some new builders right now are saying they won't allow agents. They won't allow a cooperating agent to bring a buyer in and get paid anything. It is obviously a strong seller's market, and they probably will get away with this. They are getting away with this. We've also seen recently, and I'm going to get to the worst of it in a second. I'm saving the best for last. But we've also seen, that they have wait lists in place. And then all of a sudden they say, hey, we know you've been on the wait list for 9 months, but now we're going open market, which basically means we're going to just put the homes on the market, and whoever offers the most from could be people who just became buyers yesterday. They walk up and they make the best offer, they're going to get the home. So those things you could say, okay, well, those are just shifts in the market. They had to change strategy. This is what they have to do. But here's what happens. So right now, this is my best drawing of like what is happening with prices. Okay. It's very much like that. So this is what's happening with prices. Now, most of these new builds, they want to get them in contract as soon as possible. But if it takes 6 to 8 months to finish the build from when they're getting them in the contract, and some of them aren't going that far out, but usually, at least 4 to 6 months, they are trying to have them in contract because they like to know, and they actually have obligations a lot of times with the financing that they're getting to do these big projects. They have, a certain amount they need to have in contract in order to keep that financing in place. So it's totally understandable why they do that. But imagine though, now with the builders, we got to respect the business element. They are putting millions and millions and tens of millions of dollars out on this thing. They're really going out on a limb, making a big, big bet, and it's a multi-year bet. So they have to hope that the market doesn't tank, and there's multiple years that have to go by in order for them to skate past that. In a perfect scenario, which is right now, if you were started building a project 3 years ago and you were like completing homes today, you are absolutely murdering it. But here's what happens. So you get into contract here, right? Your completion date is here. Look at the difference in value. I'm going to give you an example right now of one that we have a buyer. She's buying new construction. She got into contract for $464,000. Okay. So she's in contract for $464,000. Now here we are close to 7 months later, or no, 6 months later, and the home's going to be finished in about a month. So it'll be 7 months. And the house just appraised for $520,000. Okay. Now, what was happening, and this is what's shady, and this is the thing that bothers me, is they were trying to scare the bejesus out of her. They were trying to make her feel like if she didn't do certain things, if we didn't do certain things as a lender, they were going to cancel on her. And they were really, really pushing for this. Now, earlier in the cycle, about a year and a half ago, I saw a smaller builder do the same thing to a buyer who he strung along for weeks and weeks and weeks, just saying, oh yeah, we're waiting on a permit. We're waiting on this. We're waiting on that. We're waiting on that. And we realized, you know what? We're in contract here for $700,000. This place is already probably worth $750,000, maybe even $800,000. The builder is trying to get the buyer to cancel. And eventually the buyer canceled. He just couldn't take it anymore. He couldn't deal with not knowing when it was going to be done and when he was going to need to move. And right now they're trying to scare our buyer, and they're basically doing everything they can to try to get this out because they know they've got this waiting. So it's a shady business sometimes. It feels shady. I know it's just business and people are just trying to make money, but so we are staying the course no matter what. I've explained this to the buyer. I've let her know she's going to have immediate equity inside this home, that we just need to do whatever dance they want us to do. We'll go along with it, but we're not going to give up that $56,000 in instant equity. No, she's earned that because remember, she had to put her deposit down back here, right? She had to get herself engaged and committed to this thing way back in. She put her chips in the middle of the table, and yeah, she's won some money, and they are trying to take that money from her. So this is one of the things that happens that drives me crazy. And I'm bothered by it. I don't like the fact that buying a new home has become what buying a used car used to be. We are live right now on Facebook, and we'll be on YouTube here in just a bit. Lola, so afraid to buy right now with the prices and the competition. Now, you make a great point, and this is something we're going to talk about. In fact, we'll just talk about it right now. A lot of people are afraid to buy because we're seeing some all-time high prices. You know, you're seeing some people who are, you know, buying homes. You're seeing people promote it online. Hey, this is the highest sale I've ever had in the zip code. Or, hey, this is the highest sale for this neighborhood. And you know what? That is true. Those things are happening. So what do you do in that situation? Well, that's where you have to really, really zoom out and say, all right, what is going on here? What is happening? Lola, I'm going to send you the last video I made about the trend changing from cyclical to secular. You know what? I'm going to use my new whiteboard app here. Let's clear this off. So a lot of people expect the real estate market to be cyclical like this, right? And this is kind of always what's happened. You know, we have, prices are low because we've overbuilt. And so, we stop building a little bit and then prices go up. And then once prices go up to a certain point, we start building again. And then the supply, comes in, and then that makes the market go down again. And then we go through that same cycle over and over. What happened was in the Great Recession and the crash was we had one of these cycles get exaggerated drastically to the downside. And now we are seeing it exacerbate to the upside. Why did that happen? Well, because of what Wall Street did with mortgages and basically mortgage bonds, they were selling mortgage bonds that were extremely risky, in fact, highly likely to fail, to countries, to pension funds, to the biggest buyers they could find. And they were selling them as though they were guaranteed AAA, count on your 5 or 6 or 7%. And so that crashed the market, right? And so what happened when the market crashed is that builders got very, very gun shy. Okay, so the reason why you saw prices down here come up so much after the crash is because builders kind of got gun shy and they stopped building projects, and they had to sit back and wait, and they had to become solvent. They had to figure out their metrics again. And because of that, we're missing about 5 million homes right now in the country. And this is the reason why this is happening everywhere, not just in San Diego. So we have this exaggerated downturn. Now we have an exaggerated uprun. How long is this going to last? Where are we on this? Will this cycle back out? And what I mean by going from the cyclical nature of real estate, which everyone expects, right? That's the cycle that we're used to. We now have a more secular pattern. So instead of saying, okay, we went down here, we're going to come up here, and then the crash is going to be even more violent, what's actually happening is the truth about what's happening here is instead of going up like that, what we really did was now we're going like this. And it's completely changed. The whole motion has completely changed. And this is something I'm going to be doing an event, particularly for realtors here in a couple of weeks, where I'm going to go through this and have all the numbers and everything. But basically, this is the new cycle that we're in is this. And what's going to stop that? Well, we're going to need the builders to not only start building enough homes nationwide. I'm not just talking San Diego right now. We're going to need the builders to start building enough homes to keep up with population. We're also going to need them to build more than that to help make up the deficit, because the deficit is significant. Remember, when the market crashed, people didn't stop making babies. You know what I mean? People didn't stop needing housing. All that stuff continued on. The builders stopped building because they were getting their butt kicked. So it's a great question. Lola, I appreciate that. Hopefully I didn't screw up by putting that in the wrong place there. Sorry about that. It's a great question. I hope that makes sense. And so this trend that we're in now is likely to last for a very long time. And we've talked about Wall Street buying homes, buying units everywhere, including here in San Diego. We've talked about Redfin, Zillow. They're buying homes hand over fist. Are these people dumb? Or, and they've been doing it for a few years now, or did they identify the macro trend maybe before we did, maybe before others did? That's the big question. So you're very welcome. Thank you for that. Thank you, Greg. Appreciate it. Yeah, feel free to drop a comment. We are live right now. So let's look at interest rates. A lot of people believe this is going to be the big driver. When interest rates went up, however, during this cycle, we saw absolutely no downtick in activity whatsoever. Why? There's a tremendous amount of cash. Also, remember the last 12 years now, the stock market is up 500% plus, like 550% in the last 12 years. So people are flush with cash. There's cash everywhere. And these cash buyers, a lot of them are institutional. They are looking long-term and they're not looking to sell. So price is not as important to them as ROI. ROI to them is going to be based on rent. So rental projections and the potential for rental increases is so sure that you have BlackRock spending hundreds of billions of dollars on real estate, buying up single family homes, buying up condominiums, buying whatever they can get a hold of, because the prospect for increased rents over the course of the next 10 years, 20 years is very, very good. So if you can get it at a fixed cost, but you can have an increasing amount of income coming in from that fixed cost asset, which you can also depreciate when it's an investment, man, you've got a situation where the numbers just look really, really good. And that's why institutions are getting involved. I'll answer Greg. Greg has a good question here. Let me answer this. When do the cash buyers slow down? The cash buyers will slow down when it's about 6 to 12 months away from cycle top. Will these cash buyers though, will they sell? That's a big question. I don't think so. I think the cash buyers, and we talk about the big cash buyers, not the individual cash buyers, the big cash buyers, institutions, they may stop buying at a certain point if it doesn't pencil from a rental perspective, right? Because they're looking at ROI. However, they may stop at that point, but if the market subsides a little bit back down to where the numbers make sense, they'll be buying again. So they're a great buffer. They're actually a really, really nice, not a buffer. They're more of a floor, support. They provide support for the marketplace. So it's good to have institutional buyers buying real estate. You just have to get in the game yourself. That's the main thing. So great question. Let's take a look at this. I really want to show this to you guys because we have a situation right now, and this is the biggest thing I'm looking at right now is this right here. This downtrend. That was not a perfectly drawn downtrend. But remember, we want mortgage bonds. This is mortgage bond prices. We want them to go higher so that we can see lower interest rates. Right now, the trend is definitely lower, which means higher interest rates. However, we have recovered. This was the Fed day. We've recovered that and then some now a little bit. So we're back up. We've got a nice little short-term trend trending higher here. But look at where we are. We are right now, sorry, the easiest way to refresh or to erase this is just to refresh it. mbshighway.com, provided by Barry Abib. Awesome site. We have the 25-day, the 50-day, and the 100-day moving averages right here. First attempt to get through. Look, we got through for a split second. We were through all three of these moving averages. I was very excited at this point in time because if we can break up above this, rates will drop. Okay, a lot. This is the Alamo right here. So we got rejection, okay, on our first attempt through this. Now we're still technically below all three of these moving averages, including the 25-day here, but just by a basis point. Just by 1 basis point are we below this. So we are knocking on the door. This is the first time we've knocked on the door. Remember in the past when we've gone through some of these big moving averages, you had to knock on the door. Look how many times we had to knock this time before we could get through. And then of course we had rejection because insiders knew it was the Fed going to happen with the Fed. But if we can get above this now with this consolidation, if we can get above it and keep this uptrend moving, we've got a really good shot to see some really good lock days again. So right now, if you're in purchase contract, I would recommend locking. You can always float down if you get a little move higher here. If you're refinance, safe thing to do here is lock. If you really like your savings, if you have to have a certain rate and you can get it right now, I would say go ahead and take it. But if you're in one of those situations like, we could save $100 or $125 a month if we refinance, maybe it makes sense to gamble that and see if you can get, a 0.25% or 0.5% lower in rate. That's something that could be possible, depending upon your loan type and so forth. So, definitely speak to your loan officer or call me if you don't have a loan officer or a loan officer you trust anyway. Give me a call, shoot me an email. We can walk you through that, let you know where it makes sense to gamble, where it makes sense maybe not to gamble. Okay, a couple things here. I want to show you this. We're going to look at the markets just really quickly. Stock markets, a little bit of movement today, up 200 in the Dow. NASDAQ's down. Oil, 73.5, kind of hanging out there right now for a little bit. We really expect, and on the oil side, this is something to pay attention to. And we've talked about oil. We're looking for a $90 target. We're doing so well right now on our oil investment. It's not even funny. And I'm going to give you one of these, in fact, because it's been so nice. And I love the oil trade. And thank you for the kind words, Greg. Really appreciate it. I love the oil trade. It's been my favorite trade of all time, my entire career. I love buying, the oil companies or the USO when gas prices get really low, and then I like to sell it when they get really high. And it's really, really the simplest trade of all time. Right now, OPEC needs to deliver some supply, or price is going to continue to go up. We'll see. We'll see if they're going to do that or not. It does not look like it, which means that oil prices go much higher, which is, if you're invested the way I am, that's great. And drive electric car like I do, it's great. Gold, 1,700. Crypto getting hit a little bit today, or it looks like Ethereum is actually up a couple points. Bitcoin down 4%. I wonder what's going on with Ethereum. Probably have a big buyer in there today. Right around 35,000. It's going to be in that range, 30 to 40,000. It's going to break out one way or the other. We're expecting it to go higher. I think we will see $50,000 Bitcoin before the end of this year for sure. Some people are saying 100,000. I think we'll see 50 again. We'll see if I'm right. Here's a big one. Lumber price, they dived more than 40% in June, biggest monthly drop on record. So what happened here, and this is the way this is going to play out and how this is going to affect the real estate market, is probably not what you think. So one of the things about lumber, you got to realize that a lot of the speculation in lumber, a lot of the driving up in prices in lumber, it has to do with reservations. Think about like oil futures for an airline. They're hedging by shorting the futures because they're going to have to buy oil later or whatever, vice versa, and they are trying to make sure that they can lock in their prices. If you're a home builder, and the home builders are really who need the lumber, right, the most, and who order the most of it at a time, they're in a situation where they're like, gosh, if we can just build these houses, we can sell them for whatever. So just lock it in, just get it locked up, get the lumber locked up. We need to be able to build these houses. So if the market does soften, which I don't think will happen, but if it does, this could exacerbate the problem because, again, it's gun-shy builders that is causing the macro issue. So if builders paid up way too much for lumber and then now have to sell homes for these inflated prices, if that's not where the market's at anymore, that could get builders a little more gun-shy again. And what we really need to catch up on this housing glut is we need more units built. So we need more home builders. We need to streamline the process and the red tape that builders have to go through, because right now it's ridiculous, especially here in California. It's ridiculous. And that's the reason why this is happening. So let's see. So lumber's down 13% in 2021 total, which mostly was coming off the heels of this big dive. And that you're just seeing reservations just sort of pretty much come to a halt there. And I think it's a good thing. We need lumber prices to be more reasonable. For those, there's so many people out there asking me about Robinhood. Listen, Robinhood is a scam. The idea of, hey, we're going to get you all this stuff for free. They're just selling your information. They're taking the other, their clearing houses are taking the other side of your trades. They know you're going to lose money and they're going to make it. It's a scam. I'll say it. It's a scam. So, and they were just ordered to pay $70 million for outages and misleading customers. This is the largest ever FINRA penalty, $70 million from Robinhood. Yeah. So, and this stuff happens with the banks all the time. And it's really disgusting to me. I would like to know how much money they made, because we see this all the time. Wells Fargo, or I don't want to say Wells Fargo, whoever, big bank name, pays $130 million in fines to the SEC or whatever. And you're like, oh, wow, they really, they're getting nailed. Dang. But then you dig deeper and you find out that they made $1.3 billion off of what they're being accused of. So it's just good business. Like, obey the law. Unless it pencils to break the law, then let's break the law and pay the fine. This is how they operate. So I'm not interested in helping people find a place to park their money, to trade, to buy stocks or cryptocurrencies that's involved in that type of mindset. So hell no to Robinhood. Piss off is all I have to say to them. And if you're going to, use a firm, it's okay. Now, pretty much everyone has free trades now because they have to from a competition standpoint. I mean, free trades it's like everywhere now. But to have no fees at all for anything is a little bit scary. For, there are some, check out different brokerages. Just check out different brokerages. Use one you like. Check them out. Read reviews. Stay away from Robinhood. That's my advice. Okay, so be careful out there. If you're looking at a new build, just know what's going on. Know what's going on. Know what their goal is. Know why their goal is what their goal is. They want you using their lender. They don't want you to have an agent because they want to be telling you what to do. They're going to have their own contract. Okay? They have their own contract. They're not going to use, a standard RPA. They're going to use their own contract. That contract is going to be written very, very much in their favor. Very, very much in their favor. And if you want one of those new homes, you're simply just going to have to sign it. That's the way it works. There is no negotiation there. The way that it's treated is we have what you want, and if you don't comply, someone else will. And that is the way that it works. I know people right now who've been on wait lists for months and months and months. I hope they don't get bumped into regular market scenarios, but I have a feeling that they will. If you're on one of these new build lists, here's my advice. Stay on the list. There's nothing wrong with being on the list, but look at resale homes while you're on the list. Look at resale homes while you're on the list, especially right now. Rates are in great shape. You've got, that's the time of year a lot of people are on vacation. There are going to be less buyers in the market. We're starting to see inventory creep up a little bit. Look at resale homes too. Don't forget about those. There are opportunities out there, and we see them all the time. Every time we've looked at properties here, I've seen, and then I followed up on several of those, by the way, and things are in the works. Like just glancing at real estate for 10 minutes here online with you live, and we found deals that we're very likely to pull the trigger on. So I'm just saying there's deals out there, and it's not like needle in the haystack like it may feel. Now, if you have very specific wants and you're not just looking for investment real estate, that's different. A place that's going to be, a place that you're going to call home. Hey, we need it to be like this. We need a certain setup. We need certain bedrooms. We need them in certain places. Yeah, that's more difficult. But if you're just looking for good deals, you're just looking for good long-term investments, especially if you're, in the military. I specialize in VA home loans. You're in the military. Hey, I'm going to be here for a few years, and then we're going to be going somewhere else. It's in our forever home. We want it to be a good investment. There are a lot of those out there. There are a lot of those out there that will pencil all day if you need to rent them. And that's a good way to sort of check in on how the value of a property is trending. Is it how many times rent is it selling for? And I can walk you through all that stuff too. So if you need help, give me a call, text, shoot me an email. Happy to be as helpful as I can in the home loan space. That's what I do. That's what I love. That's what I live for. Thank you guys for paying attention to this, sharing with your friends, and I will see you all again soon.